Yeah, so it's been very interesting lately watching the news, studying the markets, and a lot of volatility going on. The XIV and the VIX particular ticker in the stock market. Just checking on you. Welcome. Thank you for coming on. We saw it was just very interesting. One of them went down like 85% after hours. Thought that was pretty interesting. And then um, I was at, as I said in previous scripts, I was at a Minria real estate meeting yesterday. We had about 220 people there. I got to hang out with Mike Jacka and a few other people. Hey, Jill, welcome. And used to go to Minria back in 2002. I went there for about 5 years and got to hang around a lot of investors. And it was good to see a lot of familiar faces as well. Going to a cryptocurrency meeting a day before that, I got to also talk about the markets and hey John, and got to talk about investing meetings as well. So it's fun to talk about the markets and investing and cash flow and cash on cash return and assets and appreciation and making money with different people from different perspectives, different parts of the markets, different types of investors, whether it be real estate, whether we're talking owner financing, whether we're talking financing with a bank, whether people are buying different cryptocurrencies. We saw a lot of money leave the stock market recently. Some of it's rebounded. We saw a lot of money move out of the markets on cryptocurrency, obviously. Bitcoin took a very big dive from over 8,000 down to about 6,000. But then it went back up quite a bit as well too. So I think because there's only so much money in that particular cryptocurrency and those markets, there's still going to be a lot of volatility. Whereas in the stock market, we're dealing with a much higher market cap. We're dealing with, $1 trillion was lost, but we're still dealing with trillions of dollars. So when I think people still need to still keep it in context within their own personal economies. I think that we deal with trying to create more in assets, more in equity. A lot of what you're hearing in the stock market is about equity, but I think we're also trying to build multiple income streams. I think we're trying to build cash flow. I think we're trying to not get involved in adjustable rate mortgages. I think we've learned from that in the past. What I think is also very interesting, though, is that you can be conservative and you can invest in a very smart way. But if the rest of the economy has a lot of student debt, they have a lot of credit card debt, or unemployment takes off, or there's a retail apocalypse, and malls start going under, and there's a lot of empty space in the commercial space, that kind of stuff can change the economy. Hey, Alex Daly, good to see you. That can change the economy quite a bit, and that can affect you even in your own personal economy if you're doing everything just right. Well, it seems like Bitcoin is on its way up now at this point, right? I think what's interesting about Bitcoin is it was finding a bottom, and I don't feel like there's retail investors that are necessarily buying it at the bottom there. I feel like it's people that just see it as a discount or a dip. Hey, Leon Gate, welcome. And so I think that's where things are a little bit different. But I do think things need to find a bottom. And some of the articles I've been reading on Zero Hedge, they don't think we've seen a bottom yet on the stock market. They think it's going to keep going. The article I just read was really interesting about the $8 trillion plus printed, only a couple trillion from GDP, and how a lot of that just had to go somewhere. And they said it went into real estate, assets, stocks, and so forth. And I think a lot of it could even be going into the crypto space. So I think you're going to continue to see the unwind on that, and you're going to, hey Kidman, you're going to also see quantitative easing go into quantitative tightening, and the Fed's going to continue to pull back, and you're going to see interest rates go up. And as the bond yields go up and the interest rates go up, you're going to see a lot of volatility in the market and a lot of fluctuation because of those two numbers. And that's kind of what I've been talking about for the last few weeks, and that is what we've been noticing in the stock market as well. So I do want to talk to you a lot about cycles in real estate long term. I just think it's very interconnected with stocks and cryptocurrency as well. I think they're all very interconnected. crazy interest rates on credit cards. Yeah, I suppose those are probably getting up to what, 25-30% on some people's credit cards right now. And people are just completely leveraged on credit cards right now. So at some point, they won't even be able to pay the interest, the minimum payment, and that could affect their housing prices and so forth. I was just talking to an agent, 27%. Wow, that's pretty high. There must be, the banks must think that there's a good chance of defaulting in the future, and I'm sure that 27% is based on something out there in the stock market. It goes off of something, I'm sure, and adjusts accordingly. And yeah, they must think there's a high probability of defaults in the future. And see, I come from the real estate world, so in the real estate world, you get a deed and you have a mortgage and you have a note, and there's some protection there, right? And so they're willing to. You get first position, you get a first mortgage or a second mortgage, and it's worth something, right? Whereas credit card, they don't really have much. They can try to come after you years later, try to take money out of your bank accounts or whatever, but they don't have much leverage. So it's considered very high risk debt, and people have to charge a lot of interest for that, versus 4% for a home mortgage. So that's kind of an update on what's going on right now. The truth, welcome to Periscope, as I get over to the real estate investing group tomorrow. Dan McCabe's MNREC. I want to give you guys an update on how that went as well. And I'll catch you guys a little bit later.